Tēnā koutou, ko Paul Walker tōku ingoa. I'm an audit partner at Crow New Zealand Audit Partnership and the engagement partner for the audit for Ngati Pahauwera. What I'm going to talk about today is around our role as the independent auditor, a bit more of an insight in terms of what we do within the audit and what our audit opinion tells today. So we're the independent auditor, and what that means in terms of independence is that the audit relationship is the only relationship that we have with the trust, so we don't provide any other services other than the audit, and that means that we're able to be independent in terms of our professional and ethical standards. And what our audit for Ngati Pahauwera covers is around giving an audit opinion on the financial statements and the service performance for the year. And what that means is that our audit opinion covers whether the financial statements, so the financial performance and its financial position, and the service performance for the year are free from material misstatement, which essentially means that the financial and the service performance information provides a true and fair view, and that those have followed the accounting rules, and that there's no material errors or issues in that financial and service performance information. So our audit opinion this year is what we call a clean audit opinion. So we're able to confirm that those financial statements and that service performance are free from material misstatement. A bit of insight into our audit approach. So with an audit, it's a test-based process, so we don't test every single transaction of the trust, but we all deal with risk. So where the areas that are more likely to have issues, more likely to have errors, those that require a lot more judgment and estimate, that's where we spend our audit effort and time. So for this year, for the trust, that's looking at its revenue and its revenue transactions, looking at its expenditure and more importantly, the expenditure on whether it's operational or whether it's capital in nature, and making sure that those distinctions follow the accounting rules, and also around the valuation of the trust property. So that's looking at who the independent valuers are, the approach that they've taken, what are the key judgments that they've applied, and making sure we challenge both the valuers and management around those judgments, making sure they follow the valuation standards, making sure they follow the accounting rules, and that all of those judgments and estimates are appropriate and reasonable in the circumstances. And so those are the big focus areas, and then we also look at the other material areas of the financial statements and the service performance, and making sure that those financial statements and service performance as a whole are free from material errors. So just to really confirm their audit opinion again, so we've issued our audit opinion, which is attached to the financial statements and the annual report, and what that is saying is that these financial statements and the service performance of Ngati Pahauwera is free from material error, and it conforms to the accounting rules, and that there are no issues that need to be brought up in our audit report.
My name is Peter Gillies, and I'm a Director Partner in Garden Noblot Limited. I'm also a qualified Chartered Accountant. Our firm is a local Napier firm that is independent of the trust, which means we're not employed directly by the trust, but we earn a fee from the work we do for the trust. We prepare the financial statements from information provided by the trust from their Xero accounting system, and we're required to record that in a fashion that complies with the statutory requirements for charitable organisations. So the presentation that you see today in that annual report is what is required to be presented by the rules around this organisation. I'll take you through the financial reports and explain what they're telling us. This year included a new report called the Statement of Service Performance. This can be found on page 65 of the financial statements of the annual report. This report is a new requirement of the trust and gives us a range of non-financial information for the trust. Things like number of people employed by the trust that are of Ngati Pahauwera descent and other non-financial measures. These are referred to in some detail in Robin's earlier report. The statement of comprehensive revenue and expenses, which is like a profit and loss account for the trust, is recorded on pages 68 and 69. And it's been split into the commercial operations on page 68 and the trust's other operating activities on page 69. This year, the farms recorded a small operating loss of $13,795. That compared with a profit the previous year of $662,609. A number of factors were at play here. Firstly, Pihanui was changed to a forestry activity from the farming activity partway through the year. So that farm did not contribute at the level of profit or income that had been experienced in previous years. The farms were also affected by Cyclone Gabrielle and the depressed sheep and beef prices towards the end of the year when the stock was valued and sold. As indicated in Luke's earlier report, the apple orchard produced its first commercial crop in this financial year. Expenses in the horticultural activity were high relative to the income that was achieved from them. And that's due to the developing nature of the apple orchard. As the trees mature and become more productive, can carry more fruit, the income flow from this activity will gradually surpass the expenses and contribute to an improved positive cash return. Unfortunately, there is no shortcut to this process, and the trust will need to weather these early loss-making years to get to the positive outcome that was envisaged when the apple activity was started. The horticulture activity recorded costs exceeding its income of $2,511,986 for the year. The major expenses were depreciation, pruning and wages. Those wages included the employment of 20 to 30 Ngati Pahauwera members, as well as contractors who also employ Ngati Pahauwera folk. This year, the trust recorded lease receipts, primarily from its forestry land, of $2,502,176, and this is compared to $2,189,676 the previous year. These lease receipts from forestry in particular will continue to increase in future years once the forestry properties are fully transitioned and planted. The financial results of the Trust's other activities, like its contract and program activities, are recorded on page 69. They record a moderate reduction in contract and program income after a significant increase the previous year. The Trust recorded expenses of $3,159,952 compared with $2,358,536 in 2022. There was a major increase in the Takatai Moana expenditure, which was up by $191,856, and that was primarily on legal fees, but these were covered by the contract income funding that was supplied from the Ministry of Justice. Manaaki grants increased by $95,009, and the financial costs increased by $507,318, and they include increased interest paid to the bank for the loans drawn down on the horticultural development. That increase in interest is a result of the higher debt level this year and also the higher interest rates that have been experienced by the economy in general. The consolidated operating deficit is therefore $2,616,951, and as indicated earlier, is primarily due to the costs incurred on the horticulture activity in its early development stages. On page 69, there is also recorded the decline in valuation of the Trust's farms and forestry properties. The valuations have been completed by an independent valuation firm, which is Logan Stone in Hastings. As has been indicated in the earlier reports, the Trust has seen its farms and horticultural properties valued at levels significantly lower than the previous years, in particular Pihanui and the Pakaratahi properties. The farms and orchard properties have been valued on a 2-yearly cycle, so that decline in value covers the period from 2021 to 2023. And it would be fair to say that when they were last valued in 2021, farm values were significantly elevated from previous years due to the change of activity on the east coast with farms being converted to forestry. A number of factors have come into play in the loss of value in those assets this year. Firstly, interest rates have significantly increased over the past 2 years. And these interest rates form the basis upon which the valuers compare rates of return in their valuations. Higher interest rates result in lower valuations for properties that are investment type properties and properties earning income. Carbon credit values at balance date were also lower than previous periods. And these also form part of the valuation comparisons when the valuers are looking at best use of the land. Carbon credit values have since balance date increased. They're bought and sold in a market that is quite volatile at times, and so the valuations can move around significantly around those carbon credit values. Cyclone Gabriel has also reminded everyone that there is a risk in land and climate-based businesses, and this will have impacted on the valuations as well. The farms, horticulture and forestry properties have reduced in value by $16.32 million. That's a paper loss on those properties. In previous years, I've reminded the meetings that the increased valuations that we've had in the previous years were only paper-based, and what was more important is the profitability that the trust can earn from those properties. That still runs true today when the valuations have gone in the other direction and have declined. They are a paper loss only, and what is more important is that the trust uses those lands to develop the cash returns that it wants to get. In particular, the orchard, where we're going to see increasing income over the next 5 to 10 years. So the focus needs to be on making those properties now return the cash results that has been budgeted for. The statement of financial position, which is another name for a balance sheet, is on page 71. It records a decline in the trust equity to $78.542 million. There are total assets of the trust at balance date at the 30th of June of $101.34 million and liabilities of $22.79 million. So those assets have been valued as at the 30th of June, and what the market dictates those properties and shares and the like are worth at that specific point in time. The total liabilities represent 22.5% of total assets, and the trust had cash in the bank at balance date of $2.5 million. The main assets in the trust are the land holdings, such as the farms, the forestry and the horticultural blocks, but also include the share portfolio, the bank account and the apple grower licenses that have been purchased to grow the rocket and other varieties of apples. $8.2 million was spent during the year on creating the orchard, to further create the orchard asset with more infrastructure, more trees and the development of those, and the associated equipment such as picking platforms, tractors and similar. The liabilities include bank debt of $18.179 million. A large part of this, about 55% of it, was originally contracted for repayment in the 12 months after balance date. But since balance date, the terms have been extended by the ANZ to spread those loans over longer terms to fit the income profile from the orchards. The ANZ loan interest rates varied from 7.51% to 8.41% at balance date, and the higher purchase debt varied from 3.99% to 10.65%. So overall, it has been a difficult year for the trust, with the impact of increased interest rates, lower carbon credits, Cyclone Gabriel affecting the land valuations at the 30th of June. Added to this is the cash requirements to invest in the orchard development and its initial running costs until it gets up to speed and is producing at its full productive value. The prospect of increasing future returns from the apple orchard in particular should in time justify the investment that has been made in them. Thank you.